Okay, good morning, everybody. It is Thursday, February 3rd, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. Just want to quickly review yesterday. Remember yesterday we came in and, well, at least anyone who was in our pre-market session, we came in and said 45, 78, 70, 78, 75 was our major eye level up top. Our expected area of resistance was basically 78 to 81, pushing up into a major swing low that we'll look at on the higher time frames. And so we said if there was enough bullish pressure and we could get through that high, which was basically the overnight high, then we would be buyers. But otherwise, it looked like we would have to wait and see what would happen. And sure enough, we came down right out of the open, came right up into our eye level and failed from there. I did give a call to try a bounce off the VWAP to see if we could actually start trekking back up to the highs, but there was no follow through. We only got about a 5 or a 6 point bounce right back up into our eye level, and then we continued to fail. And it was we were basically selling all morning, and that was it. I mean, it was pretty sideways, but the trend was lower throughout the morning, and then that brought us into the end of the day. And of course, at the end of the day, we actually got a nice move going into the close there. So that's kind of where it brings us today. Notice what happened. This is a new concept that I've been bringing up with my traders, and that is the peak above and fail. Now, there are very specific trade patterns that you're going to see looking at divergence, peak above and fails. You have a one high, you pull back, you push up, you get a higher high, you get your lower high, you have a nice divergence setup. That's just a little micro version of this, what I'm talking about. The other version is the larger scale where you have a test of a major level in 78, and we're going to make the case for that when we zoom out to the higher time frames. And then the peak above coming up just a few points above, kind of actually holding that 78, 75 as support and very generally there, and then failed. So that is the larger scale version of one of these little tiny setups on a micro scale, right? Seeing this high, seeing the market pull back, attempt to push higher, and then fail from there. And the other version of that is when it comes up and it can't even make it back to the high of the previous push and then fails from there. Of course, you'd like to see a divergence set up. In this case, you had a little micro divergence, but you will see it set up in a similar fashion where price pushes down and then you have a really obvious push up on the RVI to a higher peak. So those are two little concepts I've been bringing up lately, something that might help you, give you an edge in your trading. So let's go ahead and jump to our ultra high time frames and start taking a look at what we have on the plate for this morning. So just to kind of quickly go through, remember on Monday we focus in on the higher time frames, so we look at the yearly, and interestingly enough we pull back right to 50% of the previous year, right? We looked at the quarterly and saw that we actually, even though we pushed down and we were below 50% of the previous candle and the candle before that as well, we've made it back up above those two key levels there. So that's a good thing for the bulls. But I'm noticing that potential bearish divergence if this closes the way it looks right now. And then on the monthly, we talked about the big bearish engulfing bar, kind of setting up a bearish omen for lower levels. Of course, we never know what's going to happen next, so we'll have to see. This is a very high time frame, so it'll take time for that to develop. And then on the weekly, remember we talked about this on Monday. The previous week had a beautiful doji reversal bar, huge wick to the downside. It's like 75-80% of that bar is all wick to the downside. So a little bit of an omen for the bulls, right? And we said this was our first high time frame indication that we might actually have some bullish follow through coming into this week. And sure enough, look at what happened here. We opened right around the highs of that bar, had a little bit of a pullback, I guess towards the beginning of the week, and got this nice follow through. So that bullish omen that we talked about on Monday has definitely helped us to orient ourselves to the bullish side. Of course, right into our first expected area of resistance, which is what I want to get into here. So let's go down onto the daily here. We said yesterday we had potential bearish divergence from the overnight high. And remember the overnight high, which was, I believe, 45.80 even, was the 61.8 retracement of the whole push down, like to the tick, like literally came down. And if I could draw this, I'm probably not going to get it accurate because it's such a wide time frame, but right into 45.80, which was the 61.8 retracement. And you can even see here, we talked about the major swing low coming across here at 45.74, 72, and 45.80 being the 61.8. And we even shaded this region and said that's where we're probably going to have trouble if they can get through here. And they actually did push right into here. You can't see it in the daily, but pushed right into that shaded region and had trouble, pulled back all the way down to here, launched up, and now we're finding resistance right at this next zone. So it's not surprising that we're getting this pullback here, and we do have the bearish divergence, and as you can see, we did pull back basically at the end of yesterday, right? If we go back to this shorter time frame chart really quickly here, everything was trending up, and then the end of the day we just failed, right, and pulled back, I don't know, 50, 60 points. So that bearish divergence we were monitoring on the daily actually did get that follow through, and we also saw it on the 4-hour chart, a nice bearish divergence up top, again right at a critical level. So good confluence up there. And looking at the daily chart, just from this zoomed out perspective, outside of the bearish divergence from the high, I'm looking at potential pullback regions now, and it just as well as it bounced right out of this area at 44.84. Let me get the actual number. Back from December, it very well could come back into this area and find a lot of buyers. It's just something that we typically see. So that's something to kind of keep aware of and be aware of. And then as we continue to pull back, I want you to just notice that the push from the previous weekly low all the way down at 42.1275 all the way up to the high we just made yesterday, we have the 38% retracement of the leg sitting right at the highs of last week. So remember that major swing high from Wednesday of last week, I think. We were up at 44.46 quarter, and then all week we kept chopping within there, and I said we have to get through there for any type of faith in a continued push, and we finally broke through. I don't remember if that was Friday of that week or Monday, I don't even remember now, but we got the push through, and now as we pull back, that being that we have a retracement lining up pretty much exactly with that swing high, tells me I want to be aware that there might be a potential reaction right there, maybe even a nice strong bounce out, right? So at the high time frames, that's what we're looking at this morning. And now let's go down and we're going to talk about some of the structures that we're trading within right now and where we could expect to go if we get through the high of yesterday or we start pulling back from where we are right now. So let's take a look at the 4-hour chart, and it's a little bit of a mess. I don't know if I covered this with everybody in the public section on Monday or last Thursday, but if you zoom out and you look at the market from this larger perspective, you're going to notice that there are general regions in the chart where you have a lot of consolidation, a lot of chop, and what are considered balance areas in the market. And if you look back, we have a very general balance area from about 44.50 up top here down to these lows here around 42.50. And if you look at that range right there, you also can subdivide that into basically 3 sections. You got the top section up here where there's a lot of support when we pull back to it, a lot of resistance off the top end. Down below that, you have this section here, lots of bouncing and support from the bottom end of that zone, a lot of resistance from the top end of that zone, right? And then a little bit further down, we have this final chop zone down over here. Now, once we get up above this area at 45.30, the next area we marked was exactly where we're finding resistance right now. All right, so we chopped back and forth between this major one here, even had some nice reactions right off the 50% area, which was, again, kind of the subdivision of this major chop zone here, right? So played around, we came up to here. Now we're coming back right into this other chop zone in here. So this morning, the idea is if we stay above this line here, this general area around 45.12, 45.14, they could still pull back and probe into the zone. But if they stay up here and push back up, we're looking at playing around potentially between the highs of yesterday and whatever lows we make here this morning. And if they can get through those highs, we're pushing right up into the next block, right? And I said well, I don't know if I mentioned to you guys, but everyone in my trade room, up here it's a little bit more messy. I think the top two zones are nice and clear. This zone here and then this zone up here. This, again, a balance area of structure, and then down below that here. So this top zone is a little, this middle zone is a little messy. But once we get through here, I do think that the next target will be all the way up to the 100% extension. As you can see, 46.80 right here is a 100% extension of the previous weekly price action. And just full disclosure, we came right up to 27 extension. We pulled back 20, 30 points. We pushed up to the 61.8 extension. We're now pulling back 20 or 30 points. So coming up to the 100% extension, that's another possible scenario that could occur. And we also had a lot of failure from that level where the bears just seemed to jump in and sell it off. So maybe even arguably some type of supply zone up in that area as well. All right, so that's what we're looking at above us. Again, as we pull back, we talked about the whole leg itself. I don't want to redraw this. I don't want to redraw it and leave it on permanently because I like how well the extensions are lining up with the lines of demarcation of these chop zones, of these balance areas. But let's just look real quick. If we pull it up to the high at 86 that we made, there's that 38 right off the highs of last week. And then up at the 61.8 brings us right to the 50% bifurcation of that earlier chop zone we were talking about, right? So all these ratios and of these legs in the market, when they line up like this is really good stuff. It's telling us that there's some logic to the market here when everything starts to really line up. When all these retracements are basically lining up to the tick or within a few points from this zoomed out perspective, it really doesn't get much better than that. So everything is really beautiful. Everything's doing exactly what we would expect. And so we'll keep an eye on those areas. And then one last thing I want to leave you with is our major eye levels that we have on the chart. These levels are essentially outlining all of these areas of balance, right? These areas of consolidation in the market. And what we've seen, just looking, and if you look and see where these are sitting, they're outlining, again, all these major areas of chop. So coming into now, I want to just show you how useful paying attention to all these levels are. We marked them on the chart. This 42.13 low, I put that on the chart after we came down to 42.12.75. There's a reason I put that on the chart, and it's not because that was the low. It was also because if you zoom all the way back to previous price action, there's a reason we've had 42.12 called. First of all, we told you on the pullback, 42.12 is this major swing high that we failed from all the way back in May of 2021, at least on this contract. Came right to it, failed from there. And I told you as we pulled back, that made sense to hold. So we came down and we actually held it within a tick or two. And I just want to show you all these other levels. Again, they're all on there based on previous structure in the market. And look what happened. We held 13. We came up. We pulled back. We held 62 to the tick. Okay? We pushed through. It was messy, but eventually pushed through, pulled back right to 24.50 within a tick or two, bounced. Okay, another day came right up to an eye level, pulled back right to 98. All right, and you get the point. And it just kept going, pulled back right to 74.50 a few days ago. And then yesterday came up, pulled back, did not come to 27 until later. So 27 happened in the overnight session, that next blue line there. But we pulled back right to our expected area of support, which I didn't mention earlier. But I just want to point out that if you look at the structure in the market, you start outlining the major areas of support and resistance. That stuff is extremely relevant. You cannot argue. These lines were all on here before the market ever came here. So before we ever sold off down into this region, these lines were here. Okay? And if you look, they all basically line up with the exact highs and the exact lows of price movement. So very powerful stuff there. Now let's look at today. So I'm giving you a little bit of a lesson on top of trying to give you some levels here for this morning. Again, the 38% retracement of the whole push now brings us right to our eye level at 45.50, which is again that 46 quarter swing high from last week. So that to me looks really sexy. Of course, you never know if they're going to pull back to one of these and find support. There's no way to know ahead of time if that's what the market's going to end up doing. But we need to be aware of 96, 40, 74, 45. Again, that's that major level. And then the 61.8, like I said, coming all the way down brings us right into that level that kind of bifurcated the major high and low of the chop zone, right there around 60 to 61, or I guess 55 to 61. Excuse me, let me catch my breath here. There's another leg that I'm also looking at, and that is not the entire push. That is the where we finally got the launch up, and the breakthrough up to the new high, as in comparison to this choppy area. So you can actually look at that swing low up to there and see if there's anything interesting lining up as well. And I don't see anything as sexy there. I do notice that this nice little area of demand where we kind of ripped out of is the 38, but I don't see anything lining up. So to me, the more relevant leg in this situation would be the entire thing. Of course, you never know if they'll come down into one of those and find support, but I don't think that's as relevant. So this morning, 45 looks really good to me. 61 or 55 to 61 looks really, really good to me. But you have to keep in mind, there's a lot of levels in between that very well could hold. And as you can see in the past, the market pretty much comes down and finds support off them very, very well. Now, it doesn't work every time, so there might be a few tests, there might be breakthroughs, but eventually it finds that support like butter, right? So let's go down to the intermediate time frames and start looking at some of the other relevant levels that we'll be pulling back into. For anyone who's not familiar with how I trade now, I'm essentially not too worried about, I guess, well, we want to be concerned with direction and context, but essentially what we have to keep in mind is the market's going to do what it's going to do. We might have a bias that it's going to go long. We might have a number of scenarios of it's going to do this, and then it's going to pull back, and then it's going to chop around in here, and then it's going to go to there, and it's going to go to here. There are a million of these scenarios, and we can sit here and talk about a million potential possibilities that the market could do coming out of the open. What I'd rather do is just have my levels on the chart and trade around them and know that if my level's going to work, it's going to hold within less than 2 points, and typically it holds within a few ticks. And so I'll just trade my levels, wait for a good signal, beautiful little bearish divergence right there off the high, and just trade the levels. And if it starts to follow through and I get a follow through, I have my runners to actually catch the move. And if it doesn't, then I get my scalp off for 5 and 10 points, and I just wait for the move to actually happen. If it doesn't happen, I get out of the trade at break even, or I get a small stop out, and I just wait for the next level to come up with a good signal and try it, right? And there's going to be major levels I want to be aware of, and that's why we have them on the chart, right? So I'm dealing with my major eye levels, I'm dealing with the prediction points, and I'm dealing with the minor eye levels, these blue lines that aren't really checked. And as you can see, well, let's go to 27 here. Overnight session, we came down, we bounced right off 27 basically to the tick and got a nice little 15-point bounce, 20-point bounce off of there, but there was no follow through, right? So in some markets, this maybe could have bounced and been a 50, 100-point follow through to the upside, but because the bears are in power, they only really got up to right around this previous structure in the market right here, kind of probed into it and failed, right? And then we came back up, we tested the eye level to the tick and came down, and now we're bouncing off the next eye level almost to the tick again with less than less than 2 points of risk, and now finding support off the CP. Now where do you think our next resistance is going to be? It's going to be right up off the back end of potentially the 200 moving average, because we do have a really nice little ledge right there. but we have our eye level and then the VWAP and the 27 up above. So we're just looking at all the relevant levels and playing around within that. Again, using fibs to kind of orient ourselves with specific levels. And as you can see here, here's a great potential trade setup. A 38% retracement, a previous resistance, pushing up into the 200 moving average. Potential trade from there might be the most aggressive trade for the short side, but that's one example of how I'm looking for trade setups. So this morning, I kind of went on a little bit of a tangent here, but this morning we're going to want to look at what are we pulling back into so we can be aware of potential support areas. So if you're short, those are areas where you're going to want to take profit. And if you're one of those adventurous ones that wants to be a counter trend trader to try to catch that low for that bounce, each of these levels is as valid as the next. We see them work over and over again. And if they don't hold within 2 points, typically they don't hold, right? So why hold on to a loser at that point? If every level that's going to work is going to work within 2 points, there's no reason to be holding on to more risk, because I know that if it's going to come into a level and it's going to bounce out, that's what it's going to do. So pulling back, what do we have? Again, we talked about the major eye levels, 96, 74, 45, 44.15, 43.98. If you're if you trade this every single morning, a lot of these levels should sound fairly familiar to you. So pulling back, we've got 74.45, and then there's some things in the way. So we have some minor levels in between, we have some prediction points in between, and then obviously some agreement where the prediction points and the levels line up, which is even better. And so those are the levels we're going to want to watch on the downside here. This morning, the major ledges that I'm seeing, again, 44.45, 44.96, or actually somewhere right around this 44.86.50. And I think that's kind of it. There's just a whole bunch down where we're pulling back into right now. And like I said, I'm just looking for really good levels where things line up, gives me a nice low risk trade entry. And if the trade ends up following through, I have runners on for those larger pushes. Let me see if there's anything else I can eke out of the charts here before we go. Go up to the 30-minute here and just see if there are any interesting levels that I have not pointed out. I think that's basically it. Now, if we start to sell off and we go all the way down to the lows again, I mean, that's 200-300 points to the downside. And that could happen in a matter of an hour or two in this market, but I'm not going to talk about what we have below that major swing low until we start getting a little bit closer to that. And what I should do is probably look at what we have above us here, just to give you guys some ideas of some targets to the upside here. So let me look at my 60-minute really quickly here and see if we do push up and we can get through the general levels we have from yesterday. Then we're looking at a push right up into 46.0575 or 46.06. That would be a great target to the upside if you do find a long trade and we get some follow through the previous daily high. Wouldn't be surprising to see a peak right into 05.75 and find a failure from there. If it gets through there, it opens us up to 46.42. Again, a beautiful little ledge here with a lot of support, a lot of resistance right off that level. And then if we can get through there, we're right up into that next area. Let me go back to my 4-hour here. What is that? 46.70. Yeah, right up into this 46.70, 46.80 area, which is that 100% extension of previous weekly price action. So again, this morning, if they pull back, we find support somewhere around here. The market pushes and we start making it through that previous daily high. We've got these three general areas above us, around 84, around 42, and around 06 as potential resistance points. So I'd be taking profit in front of those areas. And again, down in the region that we're pulling back to, who knows, right? Who knows which level is going to work? We can talk about the levels that make the most sense and then be aware of some of the levels that are in between that, just in case we do find some support off of, let's say, zoom in here, some support off of maybe one of the minor levels like we just got, right? Pull back right into this minor level, a break of 1.5 points, and now this potential bounce out. So I think that's it, unless anyone has any questions. We just have a few minutes until the open. So we're going to jump down to our short time frames here and see if we can't find some trades coming into the open. And hope you guys have a great trading morning, and hope this helped you guys with finding some good levels. So have a great one. We'll be back on Monday of next week, where we'll do a little bit more of a deep dive into our higher time frame charts and take a look at that quarterly, that monthly, and that weekly chart and see what has changed as we come into next week. So have a great day, and if you're interested in joining us in the live trade room, just send me a message and we'll work something out. So have a great one. Take care.